Chairman. Chairwoman Baer, let me, I've looked at your record in professor of regulatory policy, and very impressive. And I'm just curious, in a broad context, are you, like I am, a bit troubled? Frankly, for me, it's more than a bit troubled by this, what I've called unprecedented involvement by the government in the private sector, whether we're talking President of the United States deciding who gets to be CEO of General Motors, whether we're talking about the fact that we now have in the United States of America something I thought I would never see, but a federal government pays our telling private American citizens how much money they can make, and bailouts and TARP and second stimulus coming in, on and on it goes. So just as a accomplished professional individual, I mean, are you nervous about this general direction and, again, this unprecedented involvement of the government in the private marketplace?
Absolutely, and we think better tools are needed for the government to deal with this in different ways going forward. We're very much opposed to, and I believe the House bill does this, prohibits capital investments in banks and financial institutions going forward. I think government ownership of financial institutions has created not only a lot of public outcry and cynicism, but also very difficult issues about what should be private entities in private sector decisions, based obviously on some prudential regulatory standards, but government ownership has created a whole host of problems, and we would like to end that as going forward.
Okay, with that being said, let me take you back to, and this again, as I pointed out in my opening statement, was brought out in when we first had Ken Lewis in front of this committee several months ago. The meeting that took place here in D.C. with the 9 largest banks 10 days after the TARP legislation was passed. And again, the TARP legislation was passed designed to go in and get these troubled assets off the books, free up credit, free up straighten up these balance sheets, et cetera. 10 days later, the 9 biggest banks were brought to the nation's capital. According to Mr. Lewis's testimony, Mr. Paulson, Mr. Bernanke, and you were in that meeting. And Mr. Lewis indicated he had no idea what the meeting was about. That the meeting went with a piece of paper slid across the table to the banks, telling them how much money they were now going to take from the TARP program, whether they asked for it or not, and that they had to sign a statement saying they were in agreement to that. Mm-hmm. Is his recollection of that meeting accurate? Is that in fact what took place? Again, not 10 days after we were told, the Congress of the United States was told that the TARP program, the money that was made available, be used for something entirely different.
Right. I was invited to attend that meeting. I was not involved in decisions about who should come to that meeting and who was going to get what. My role was confined to explaining the temporary liquidity guarantee program, the debt guarantee program, and that was the only remarks I made were to explain that program. And I did not opine or comment at all on the capital investments piece. We were not involved in decision making, and we remained silent during that discussion. But yes, these banks were strongly encouraged to take this money.
Going back to your answer to my first question, though, were you troubled that day about what you saw taking place in that meeting? In light of the fact you just said that you made 2 statements already today. You said you were troubled by this unprecedented involvement of the government in the private sector, and you also said in an answer to Mr. Ice's question earlier that the government should act as one. So were you sitting in that meeting troubled by what you saw take place in that meeting, again, 10 days after the legislation had been passed for an entirely different purpose?
Yes. I think 2 things. I think these decisions were made in the fog of war. These decisions had to be made very quickly. And the situation was becoming more and more destabilizing. And also there had been an international agreement to use a combination of liquidity guarantees. We were involved with liquidity guarantees and capital investments to stabilize the system. Frankly, the idea of it took my breath away, and it was quite unprecedented in terms of the private sector system that we have. And so I was concerned, and I have
Was that the first time, did you know what was going to take place in that meeting, or did you come into that meeting much like Ken Lewis and the rest of the 8 other?
We were told in advance who was going to come and that they were going to be asked to take or encouraged to take capital investments. We were absolutely told that in advance. I did not weigh in one way or the other. I confine my role to explaining the debt guarantee program. I have said in retrospect, I wish we had weighed in, because I think, again, government ownership in banks has created a whole host of problems. And by the way, on troubled asset relief, I still think we need a program, and we would like to see maybe perhaps Congress authorize that going forward. That still needs to be done and
Mr.
hasn't
Chairman,
been
if I could real quick, and I appreciate I appreciate what you said, Chairwoman. I think this has been very helpful. If I could just do one other question, Mr. Chairman. The talk this week is about using TARP dollars for stimulus for something outside of the
Right.
scope.
Right.
I mean, again, I think it was done already, but I totally disagree with this. Your thoughts, if you would, on the idea of using TARP money for second stimulus?
Well, I think you're asking me something beyond my pay grade, because I like to confine my public comments to areas where I think are appropriately fall within my sphere as chairman of the FDIC. I do think that there needs to be more focus in terms of troubled asset relief. We still have toxic assets on the books of banks, particularly the smaller banks really did not benefit from the capital investments. The smaller banks are a large share of small business lending, but their need to continue to work out and reserve against these legacy loans that they have is inhibiting their ability to engage in new lending. So we do think it would be appropriate and consistent with the troubled asset relief program to try to deal with that problem. But beyond that, I would not want to opine about other uses that others might want to make of the TARP money.
Gentleman's time is